I could be wrong, but I believe that force will be very strong. So that force can be strong enough to counteract the 4-year pattern. Who knows? So are you saying there will be a bull market next year? We might be in a super duper loop. We'll see. Yes. Okay, I think that's a little too much for me. We'll see. Yes. So there's CZ, the founder of Binance, talking about how he thinks the 4-year cycle is basically over and that we are now in a crypto super cycle. If you've seen my earlier vids, you know that I've been talking about the 4-year cycle and the liquidity cycle. The liquidity cycle has been the most important factor in this market. Even though people are still focused on the 4-year pattern, we already know that liquidity has usually worked with a 4-year time frame too. And if we look at the usual 4-year cycle, we are right on track for the market to reach its peak in 2026. That will also be when the biggest wave of the cycle, also known as alt season, fully begins. Now, when I first heard the term super cycle, I got a little worried because if you go back to 2021, we heard super cycle blow off top, and that was right near the end of the cycle. This time, there hasn't been a big market move for old coins that we can see. It would be reasonable to expect a much bigger run-up in the altcoin market. So far, 2026 looks like a great time for this, taking everything into account. With this post in mind, let's talk about a few things. CZ's main point was that this could happen because of US politics, the Fed easing, and businesses getting on board. And the second one is very important because the Fed making things easier will really in the end allow TradeEye to go wild too. With stocks doing so well, all other risk-on assets will soon follow, crypto included. We still need to see the Federal Reserve make things easier. Up to this point, the Federal Reserve has been open about the way they plan to proceed. Going into tomorrow, which is today, we will probably get another rate cut. That will be the 3rd rate cut in 2025. If that happens, it would be in line with 6 rate cuts over the past 2 years. And that would also make sense with 2026 being the year when we no longer have any more rate cuts. But we also begin to see a change around these markets because we know that there were 5 rate cuts from 2019 to 2020. And then in 2021, there were no rate cuts at all. This is important to note because usually rate cuts are a sign of bearish sentiment. I mean, a lot of people think that rate cuts are very bullish, but at first, they aren't optimistic. They are a factor that lags behind. They have always been that way. So if we look at 2020 to 2021, 2021 was very hopeful because there were no rate cuts. I think that 2026 will basically be like 2021 for this time period. Now, besides that, many older coins have been going up in value everywhere. Today, we did see Axel. You know, it was up by almost 20% or more. I believe that it reached a nice high peak of about, it was about 13.5 cents. On a few exchanges, I did see that this thing was wicking a lot to the top. Some old coins are a little different though. Many of them are still bouncing off the lows. Many of these gains aren't really wins when you look at the big picture. Bitcoin had a nice wick up to about 94.6K. I've been following the 4-hour plan, if you know what I mean. In the last movie I made about the 4-year cycle, I said that I don't really care about the macro view right now. I don't care about this story that repeats every 4 years. I don't care about what we'll see as we move into 2026. The main thing I'm looking at is strong structure. We're beginning to see more and more strong patterns form on Bitcoin. That will also get us to the broader bullish structure. We do have a run of higher lows and in theory, higher highs right now, which is very good. The main thing I'm interested in here is what I'm mostly paying attention to as we near the weekly light close. Okay, this is the most important thing for me this week. I want to see a strong close over this level of 93.3K. This will be very bullish when it is reclaimed because that is where a lot of our support has been since the rise in December and November 2024. If we could turn this around, we could start to get back to some of these other support zones and also some of the resistance zones on Bitcoin. This chart has looked great so far. We've been discussing the positive trend. We've been discussing the higher lows. We have been talking about what might happen next. We still need to be very careful with Bitcoin, especially as we go into today, because it is going to be very risky. I wouldn't rule out the idea of Bitcoin having a big swing low of about 5% back down to 87,000 or 88,000. We could even dip below this, hitting around 86,000. That would be normal. And then we'd start to see that rise back to over 100,000. When it comes to Bitcoin, that's what I really care about. Ethereum has been in a similar position as Bitcoin, but Ethereum's chart looks a little more bullish because there are clear higher lows. But also our higher highs have had more momentum behind them. This was especially true for the most recent one, since Ethereum was aimed at the 3,400 level. This is a very good chart. Once more, this is very much like Bitcoin. And let's look at a weekly chart of this. When we talk about Ethereum, the main thing we're looking at is whether or not we can flip our previous lows of about 3,500. From where I stand, this is what it's all about. There has definitely been a lot of resistance in these areas since at least December and the summer of 2024, as well as March of 2024. So it's going to take some time. We should be very excited about Ethereum when we start to flip 4,100. That's going to get rid of all of 2024's resistance levels and take us back to the all-time high. And finally, with XRP, of course. You know, XRP is in the same kind of situation where there are bigger lows. We don't want to see lower highs on XRP's chart, but we are seeing them along with a run of higher lows. So when XRP comes back, we want to see one of these highs get broken over. And until that thing happens, we will just be in a very, very negative picture when it comes to the price action sort of structure. Just so you know, I want to see more from XRP, especially in the daily time frame. We've been gaining a little bit of support at about $2. I want to see us break this daily barrier and get a daily candle close above $2, like 23. That would be great for XRP. Let's talk about the super cycle now. Let's discuss the Federal Reserve relaxing. So of course, today is the day. What happens before the Fed FOMC meeting at 2:30 p.m. doesn't matter. What we expect Jerome Powell to give us is what we're mostly interested in. He lets us know what the Federal Reserve is planning for 2026, if we get a rate cut or not. And then we also get some news about the job markets, which are also very important for risk on assets. At this meeting, we need to make sure we pay attention to what Jerome Powell is saying. I think this will be a positive meeting. But we still need to look more closely at what the Federal Reserve did at the start of the month. And this is a great post about it from Crypto Rover. So the Federal Reserve did just take one step closer to QE. The Federal Reserve put $13.5 billion into the banking system yesterday, the largest one-day boost to cash since 2020. And it happened on the very day that QT came to an end. This isn't a typical move. Overnight, banks take loans from one another, but last night, all of a sudden, a lot of banks needed cash at the same time. When that happens, borrowing rates for the night go up quickly, which is a sign that there is liquidity trouble in the system. The same thing happened when there was a spike in the 2019 repo market, early 2020, when there was funding stress before the COVID reaction. In both cases, the Federal Reserve took strong action to bring the economy back to normal. Yesterday, they did it again. The Federal Reserve made a $13.5 billion deposit in one day, which was a sign that they didn't want this stress to spread through the markets. This isn't a sign of a banking collapse. It shows that cash became harder to get, and the Fed reacted right away.